$318 trillion. That's the total debt carried by the world today. Not a forecast, not a hypothetical scenario. That number already exists, verified by the Institute of International Finance at the close of 2024. Now here's the part most people aren't ready to confront. The entire global economy, every good and service produced in a year, totals roughly $105 trillion. In other words, global debt is 3 times larger than global output. And while this imbalance keeps growing, silver quietly trades near $64 an ounce. That detail matters, because this exact setup has appeared before, not once, not twice, but repeatedly, across the rise and fall of major civilizations. And today we are firmly inside Act 3 of a 4-stage cycle that has never ended differently. Let's break down the pattern. It's remarkably simple, almost too simple, and that's precisely why it's dangerous. People struggle to accept that something so basic can dismantle entire systems. Every cycle begins the same way. A society uses real money, gold, silver, physical assets with intrinsic value. Money you can hold. Money that represents something real. Trust grows, trade expands, economic activity accelerates. People believe in the currency because it's anchored to something tangible. Eventually, the state needs more money, war, large social programs, political survival. So shortcuts appear, metal content in coins is reduced, paper claims multiply beyond available reserves. Authorities assure citizens the currency remains strong, simply because it's official. And for a time, that reassurance works. The money supply balloons. The real backing does not. Prices start rising, the currency weakens, people notice. They exit paper promises and move into real assets. Land, resources, gold, silver. Governments respond by printing even more to meet obligations. The response accelerates the damage. Prices surge, trust erodes, social cohesion frays. Germany abandons the gold standard to finance World War I. They expect to win. They don't. The Treaty of Versailles demands 132 billion gold marks, over $500 billion today. Reparations consume roughly 25% of GDP. The government expands social programs. Taxes fund only 37% of spending. So the printing presses run. In 1922, 160 marks per dollar, then 7,400 per dollar, a 46-fold collapse in 6 months. In 1923, June, 192,000 per dollar. October, 170 billion. November, 2 trillion. Cash is hauled in wheelbarrows. Wages are paid twice daily. Prices change mid-meal. Farmers reject paper entirely. The middle class is erased. November 15th, 1923. The Rentenmark arrives. 1 trillion old marks become 1 new mark. Reset achieved. Same 4 acts. Same ending. The United States, 1971, August 15th, 1971. President Nixon closes the gold window. Foreign governments can no longer exchange dollars for gold. The dollar had been fixed at $35 per ounce since World War II. The closure is called temporary. It never reopens. Before 1971, wages and productivity rose together. Afterward, productivity continues upward. Wages stagnate, assets inflate, purchasing power erodes. Gold rises from $35 to $850 by 1980. That wasn't gold soaring, it was the dollar weakening. Today, U.S. debt, $36.1 trillion annual interest. $892 billion projected by 2034, $1.7 trillion per year, more than defense spending. Globally, confidence is cracking. Central banks diversify reserves. BRICS explores alternatives. China and Russia accumulate gold. This is Act 3. Gold trades near $4,230 per ounce. Silver trades near $64. Gold to silver ratio, 67.1. Historical norm, 1550.1. At just 51, silver reaches $80, a 34% move without excess. Adjusted for inflation, 1980 peak, 194 at 2011 peak. $70 silver trades, as if nothing is wrong. As if $318 trillion in debt is manageable. As if this time is different. That phrase has been repeated before. Rome said it. Weimar said it. America says it. The cycle doesn't care. Debt cannot exceed output indefinitely. Currency cannot be diluted forever. Printing does not create wealth. These are mathematical constraints. Silver isn't speculation. It's protection. Protection against a system that cannot sustain itself. This mechanism has operated for over 3,000 years. It doesn't negotiate. It doesn't warn. It simply runs. And right now, it's running.